and you talk to a lot of different people, those who have an incentive for the market to drop, who have cash and are waiting for a discount, they are selling doom and gloom. It's like, hey, man, I want to get a discount. House prices, I hope they go down because I want to use this $100,000 down payment and get it at a discount. And I think it needs to go on a discount. And I think those guys are losing in a big way today. I think they're losing in a big way today because the level of advancement that's happening, in my opinion, is so aggressive and fast that wealth is coming. Like even when Trump sat down with Kristen Welker on Sunday with, what's it called, Meet the Press, I'm sure you saw the interview, and she says, well, you had really good job report. He says, why don't you say the number? What was it? 172,000 jobs. How much did we beat expectations? Go on and say it. And she says 3 times you beat the expectations, right? So on one end, you're looking at, so, wow, economy's horrible, people are distant. Dow was up, NASDAQ's up, S&P's up, jobs are up, all this. Why is this happening? So I think there's going to be those who wait for market crash rather than participating and getting involved will be left behind, in my opinion, in a massive way. My opinion, massive way. And by the way, I believe it'll be such a and by the way, this doesn't mean that there won't be corrections and stuff happen. Or do I think there could be a possibility of a 20% correction if shit would have hit the fan? Sure, yeah. But I think that 20% is going to follow up by 3x, by 4x. And then they're going to be sitting there saying, I wish I was in the market involved with this. Rob, do you want to pull up that clip with the president on the plane on Air Force One talking about teaming up with AI? And go ahead, Rob.
Potentially taking these equity stakes. Have you spoken to Sam Altman or any
No, there's a concept out there. There's so much money and it's so big that there are concepts where pieces could be given to the American public, where the American public essentially becomes a partner with the companies. And I will tell you, yeah, I have spoken to all of them. There's something very interesting about it, where it almost becomes a partnership with the American public. And we'll look into that. We are looking. I actually have a meeting scheduled in the very near future with, did you know that, with all of the companies. And we're talking about it, where the American people can benefit from the success of AI. And by doing that, they're going to like it better. Because we're leading China, we're leading everybody in the world with AI, and we want to keep it that way. It's probably the biggest industry.
Do you agree with that, Tom?
To a certain degree. Remember, he liked the opportunity to invest in Intel, and he thought that having that equity was like good for America. So I think these are two different angles. I think Bernie is looking at, I want to tax it and control it.
Tax the rich and control it.
Exactly. And I think what he's looking at it is basically, why shouldn't the federal government effectively have opportunities to build an ETF of the companies that help? I disagree with that position, but I think that is what the president is kind of saying.
That's definitely what he's saying. So we have a way to do this already. It's called the U.S. stock market. The problem is that these companies are not going public. Why are they not going public? Because regulation is too high, the expense is too high, and there's too much capital available in the private market.
Starbucks is
they don't need to go public. And so the way that this used to be solved is the companies went public, and you could buy the S&P 500, and you got exposure to the American economy, and you had a stake in the capitalistic system. Now what happens is that all of the returns, or a lot of the returns, are being created in the private market. SpaceX is a $2 trillion company. Name a teacher, a pension fund, et cetera, that got to invest. Now, some people will argue, well, the pension fund gave money to a venture capitalist who then put money into SpaceX. So there's some indirect ownership there. But what these people want is they want the ability to actually own some of the stake directly in their brokerage account. And so actually a way to do this is to get these companies to go public much earlier. Amazon went public at a $400 million market cap. Anthropic is a $1 trillion private company. Like, what are we talking about?
It goes back to the point you made about the $1 billion company and the $100 billion company, because I love the story of Apple. I'm going to get this wrong, so somebody got to correct me. I think it took 42 years to get to $1 trillion in market cap. It took, and I think it was 2 years and 16 days or some ridiculous, it's a few days, to get from 1 trillion, Pat, to 2 trillion. And then I think it was 16 months to get from 2 trillion to 3 trillion in market cap, and then barely a year to be, around 4 trillion. So it's amazing. So you add up the last three, it took you 42 years to get to $1 trillion, and basically another 3.5, 4 years to 4x that, which goes to your point about $1 billion company doing it versus a $100 billion company. Where's the scale? Where's the speed?
But that makes sense even if you look at sales companies, you look at individuals, you look at YouTubers. Like, how much is Mr. Beast's YouTube channel growing compared to smaller YouTube channels? What's the likelihood that's going to be able to get to 1 billion subscribers? You know, in the next couple of years, Mr. Beast's going to have 1 billion subscribers, right? Depending on how YouTube controls the algorithm, but his content, what he's creating. So Kalshi came up and said 12% chance Mr. Beast announces an IPO. They have a new CEO. I think their valuation from a couple of years ago, they were saying it's worth $1.5 billion. Right now, it's around $5 billion. Their chocolate business, if I'm not mistaken, $250 million of the revenue. They have $250 million of just the chocolate. So can you fact check this for me? It could be 200 million. What is the number? Wow. Okay, I was right. $250 million in revenue. And so they got a new CEO, solid guy. What do you think is the likelihood that a YouTuber like Mr. Beast, whose top line revenue for his whole brand right now is $900 million, what's the likelihood somebody like that goes public?
Well, I think you have to realize he's not a YouTube business anymore.
He's not.
Right? Now, he makes money on content for sure. But what he's basically figured out is I need to go and build products and companies. And the business looks very different than it did maybe 5 years ago. The second thing is if he had not raised money, the odds would be near zero because he probably doesn't want to deal with being public and all this stuff. The second you get investors and the type of investors that he has, they need to make a return. The only way you make a return is at some point you got to sell. You got to be able to monetize the investment. Well, unless you're going to just keep raising more capital from private equity and they're going to be secondary transactions, the way you get the liquidity for your investors, you go public. And so I think that it is increased odds now that he's taken money from some of these investors. The other piece of it, though, is what if he doesn't take the whole thing public? Right? So one of the aspects that I think people always look at is like it's black and white. Either you take the whole thing public or you stay private. What if third? Or what if he sells the chocolate business to Hershey? What if he takes another piece, right? And he starts to monetize these different assets, but he realizes that the parent company being private is really valuable. And instead he's able to monetize the individual assets. I don't subscribe to the idea that like Mr. Beast is going to buy Hershey's, right? But I do subscribe to the idea that Mr. Beast is probably going to, in some verticals, become the consolidator. And so if he has the right people around him that understand capital markets, understand how to do M&A, I mean, he's in control, right? I mean, he has distribution in the world of AI where somebody can listen to a phone call and build a product while you're on the phone call.
Unbelievable.
The only thing that matters is, do you have distribution? And he's probably got more distribution than anyone for a certain subset of, the global population. So he gets to dictate demands.
Tom.
I agree with that because I think what you're seeing is basically also the Kardashian effect. So you have this, think of the Kardashians as personalities, as sort of a holding company, right? They're holding this value and they're holding the audience. Okay, how do they monetize the audience? Well, you had... I
mean, if you really want to go to it, we don't want to go there.
No, let's stay out of alternative video products and just stick with...
Mr. Beast makes different kind of videos, Tom. That's not what he specializes in.
I completely understand.
Allegedly, yeah.
It's exactly right. It's not... somebody walking in the shadows.
Tom got startled. Tom, I don't want to start you. I'm just telling you.
We're not going to go here.
I thought you were going there. This is a family-friendly podcast, Tom.
And Can we pull up the clip?
Kylie, was it the...
Can you pull up the clip?
Yeah. So you take the Kardashians, they have this storehouse of audience. And then Kylie went out and just with a lip gloss.
Yep.
And just with her audience, because she was the new to the party. I think it was simply Kylie's lip gloss and Kylie Cosmetics. And so suddenly that was there it is. First 18 months, $420 million in retail sales. Crazy. Something that Lancome, if they put out a new product in their lineup, they would have absolutely given their left leg to have that as have $500 million retail sales in a new product. So now what did they do with it? And go take a look, scroll it up a little bit. Coty, the beauty brand, goes, wait a minute, we'll take 51% of it because now we've got the audience and the product. And they gave her $600 million for 51%. Now the product company is monetized. So I agree with that. And so this is how Mr. Beast, I think he's doing the same thing. He's got access.
I say if he's
audience,
yeah.
product,
Yep.
and then I agree with the Hershey comment 100%. Will it be M&M's who's been private forever?
Yeah.
Or will it be Hershey or someone that comes up and does what Cody does? Look, we'll take 51%, we'll pay you for this, and then we'll run
you know
it.
what's a great thing about where he's at, though? He doesn't have to do anything.
True.
He literally doesn't have to do anything. And the longer he goes, you know what I'd love to see a case study? A guy like Mr. Beast in 10 years or less being worth $100 billion. Imagine that playbook. Now, somebody may say, Pat, you're out of your mind. What's the likelihood that Mr. Beast is worth $100 billion in 10 years?
Oh, I think
Over 50.
I don't know if it's him or somebody like him, but I think that you're going to start to see significant number of people. 100 billion is a big number, but it's called 10 billion. I think that's pretty number.
How old are you?
37.
I'm 47, right? We're 10 years apart. In 10 years, we'll do a podcast, and he's going to be very close to it. You know why?
Yeah.
Inflation. Inflation.
Not just inflation. No. You know why? You know what I think is going to happen? Because I think right now, what he's thinking about is the following. He's right now selling products that don't have the highest multiples and valuation. Someone's going to come and is going to say, hey, dude, with all this stuff that's going on with AI, we got to launch a product that's going to grow fast on its own. Why don't we go hire some of the best folks that we have, bring them in, and let's build something that can have a 100x multiple, 50x multiple. When I'm saying 100x, I mean, I'm saying like the speed that it goes. If he goes that route and he has that kind of eyeballs that he's getting, forget about it. He controls his destiny.
He did Step Financial. They acquired this
that.
like a fintech product, so I think they are moving that way. But you want to know, speaking of the Kardashian brand, you know what number I saw that blew my mind? Ivanka Trump was on a podcast with David Senra recently, and she talked about her fashion brand, which I think I sort of remembered she had a fashion brand, whatever. She said that she had something like $800 million of annual revenue.
On her fashion brand.